Good morning, first day of February 2022, 12:30 a.m. And yeah, let's check what is new there. So let's start with the Ethereum today. As I told you yesterday, we see a little bit of a recovery. As I said, we saw some recovery also in other markets. Let's check Standard and Poor, how it recovered yesterday. S&P 500, here it is. Yeah, you can see it recovered really nicely yesterday. And now we are even attacking the weekly 21 weekly EMA. If it will break it through, then this is great sign. I see it recovering. I see recovering basically everything a little bit, very slowly. You know, the volume is still low, mainly in crypto. So I'm still not convinced that this is the end of the downtrend. We need to see a little bit more, but yeah, gives us some hope, at least. And okay, that would be it. A very short update. And I wanted to do something else today with you, and that would be I will show you if you I will invest more time into stocks because there is not so much to talk about at Bitcoin and Ethereum right now. But yeah, I wanted to focus on stocks, and for today I took Zoom. Yesterday we were talking a little bit about Zoom, about Netflix. For today I will take Zoom. For tomorrow I will take Netflix or AMD. I will do these three companies which I like, and I'm heavily invested to. Zoom, I am the most invested all of the companies. As I told you yesterday, I invested basically from 500 down, and yeah, I got burned a lot. And but I will try to, but that happens, you know. It's a risk every time you buy a company. It's a risk that it will go down. I did a mistake. I didn't check how far it is from EMA, and it is really far, so it was heavily overvalued. This is always what you should looking for, and yeah, I did a mistake. So be aware of these mistakes. Once it breaks down under 21 weekly EMA, it's a beginning of the downtrend usually. That's a not good sign. You can see that here we beautifully copied all the time above it, basically from January until October. So what is it? 8 months bull run, 9 months bull run even. It's crazy. So 9 months you got in a profit, and then you got totally screwed. So yeah, I got totally screwed actually. I sold a few here and here, but then I bought. I thought we are going to 1000 at least. Let's do some analysis here. Let's do Fibonacci as yesterday. Let's try to put it just like here. Here we have golden ratio. You can see here this should be considered as a mean. So I really believe that Zoom will break out. Now, this is the 9th video, and for 9 days we are talking all about technical analysis of different things. Now, I want to realize one thing. This is not Bitcoin or Ethereum where you don't have any fundamental data. This is a company, real company, which is providing the product, and you can use that product and you can check it. And it was really popular, and that company is generating some revenue and so on. You know. Now, when you want to invest into company, the one thing you should do is, of course, check what the market is doing. This is the technical analysis. How much it is overvalued, how much it is undervalued now. Now it is really undervalued, let me tell you. And the moment I'm waiting for is a big volume spikes like this. So I'm buying, and once we will see that spike, that will be huge. I expect a huge run towards golden pocket here. But to not be only technical analysis, you need also some fundamental data. And I found really useful report in the government of United States, which will tell you a lot about how the company is doing actually. And it's at first it will look really complicated, but it's not. It's really easy to understand. I'm lucky to get professional education about that. I studied actually finance, so I forgot already many things, of course. But this is the basic annual report which you can find on the internet. And this one is really good because it's consolidated per year. So you can see how Zoom is progressing, and it's progressing absolutely massively. And I can explain you what was happening in some of the years where we see a huge growth. And yeah, so and I will try to explain why I'm investing now into Zoom so heavily, and why I'm basically convinced that this company is a lying gold mine, let's say. Let's see how it will turn out, because there is a huge competition in the market. So first of all, I would like to tell you what the Zoom is. Zoom is the online meetings, online conferences. They offer several products about that. They provide high video and high audio quality meetings. Companies can pay for it, and what is the revenue? The revenue is what money they get. It's mostly from companies which pay subscriptions for different types of accounts, and that's basically how Zoom is earning money. So it has users, it has companies which pays for the service and for the online meetings. And of course, we all remember Corona times, like heavy Corona times, where we were all locked at homes, and this was the booms, and we will talk about that very very soon. So, and it's nicely reflected in the graph. Actually, I will put it like this. So I'm not sure when the company was started. I know that there was a split. They did a IPO in 2020, I think. IPO is basically the stepping into the stock market. And so this one goes from 2017. So let's analyze it. 2017, they have 60,000 revenue. Yeah, it means the people all around the world, that's in thousands. Sorry, so it's 60 million, not 60,000. $60 million per year. Uh, yeah, the number of customers were growing, but it was still very small and unknown company. The cost of revenue not really important now. Gross profit 48. This is basically this one minus this one. Now operating expenses. This is extremely important because this is how the company is basically able to make money, because you have a revenue minus costs, right? And if your costs are higher than revenue, and your cost of revenue, so to generate the revenue, this is the cost of revenue. So to generate this revenue, they need to have these costs. Yeah, whatever was it. And so this one is real expenses they spend on research, sales, and administrative. So they were in loss, right? Here you can see it, minus 14,000. And yeah, so they were in minus. The the net income per share was 0.2 cents at that time. And yeah, this is the most important data you need to know. The rest is not really important. I can talk about some other things later, but this is what we need. So 60,000 revenue, 48,000, let's say net revenue, 48,000 costs, and plus minus different. So we have 48,345 here, 48,345 here. That's zero, right? Then there are other interests and nets, provision of foreign income taxes. There's some taxes that is not really important for us, but this line is really important. That is calculated distributed earnings. But the most important one is here, this one: net income or loss attributable to common stockholders. So this is for you. This is what investors get. Yeah, this is how they basically lost the money, right? In 2017, 14 million. So that was really the company itself was in odd zero, yeah, which is very rare, I would say. Like, to have zero is pretty rare, but they managed it somehow. But overall, uh, the if you would buy the stocks, you would not be pleasantly surprised, let's say. So when it is in these abbreviations, it's a loss. Yeah, when it is without it, you can see it here. It's income, and it's also mentioned here. So you would be in loss here, 0.2 in 2017. Then let's move back to 2018. The company begins to get some steam. You can see it now. We more than doubled to that's just to give you imagination. That's 2.5, right? 159, 478 divided by 6817. That's 2.5 more revenue. 2.5, yeah, X. So just imagine that. A huge success in my eyes in 2018. Cost of revenue 30,000. They almost tripled the cost, however, which is well, it should go hand in hand, right? So if we have 30,780 divided by 12,472, 2.46. So it almost eliminates the gain they got, but still it's visible that they are going better. And yeah, that's a definitely good sign. Operative expensive also going higher, but not as much. It's not 2.5x. So the results should be better. Yeah. This one, sales and marketing got really, really, really up, more than double. So that's again not a good sign, because with revenue, also the costs are running in the same pace, which is not good, because they are not able to save the costs. So they are in loss. They are in loss even in operations, and therefore we are in a smaller loss, but we are still in loss in net income. So now we are in a smaller, 50% smaller loss as a stockholder. So being a stockholder here and here would not be a pleasant situation, but you would need to wait. The company is growing, and yeah, this is used. How many shares is used in computing? For common shareholders, you can see 70 million here, 78 million here. And okay, let's move to 2019. Sorry, this video will be a little bit longer because analysis takes time. Yeah, so I cannot rush this. You can jump to further years if you want, but I wanted to do really deeper analysis of one company, so you see how it is done, and you see how you can rely on this data. You can this is the basic data. Yeah, this is very basic in a nutshell. You can get much more data from annual reports. They are available on investors.zoom.us, and you can see all the numbers there. It's in the beginning it's really hard to understand it, but in time, when you learn what it means, when you Google different things, you will learn a lot. You will learn what does it mean. There are lots of explanation of each of the things below in the annual report. So this one is just also again nutshell, but in PDF version. It's a huge one. Sorry, this is also a nutshell. Oh, this is third quarter. Oh, yeah. Yeah. Let's check annual report. That's the one. Annual report 2021. Yeah, that's the one. 104 pages. Yeah, so good luck reading that. it's it's a lot of information, but it will give you perspective, like how the company is doing and what the management is doing. And I went through it yesterday. I didn't read everything, of course, but I'm planning to do that. But so far, I feel great about this company, to be honest. Anyway, let's move back to 2019. So you can find super deep information here. You can find everything of who is doing what, and when they do it, and how they do it, and what are their plans, and everything. So let's go back here to the numbers. So 2019, again, doubled the revenue. I want to tell you something here. Uh, Doubling the revenue doesn't mean that you are doubling the net income, right? Doubling the revenue means that you have more revenue, you have more customers who are paying for your service. That's all it is. Yeah. What you want to do in the healthy company is to have as small as possible cost of revenue, and as small as possible the sales and marketing, but it paid off. It paid off. The more they invested into marketing, the more revenue they got. I fully understand that strategy, and in the end it will pay off. You will see that the strategy was really good. And total operative expenses are also going very high, also doubled. So the company cannot really make so much profit, I mean, it's in thousands, yeah. So we are talking about 330 millions of dollars, which is not a peanuts, right? So now we are in where we are, net income loss. This is this one, the white one. Already 7.5 million in income, not in loss. That is awesome. Uh, but when they distribute it around the earnings for the participating securities, they are on zero again. So we are still so we are still not in profit as a stockholder. So you will still not be happy here actually. You are not in loss anymore. You can see the gradual changing, and this is not a small, let me tell you, this is not a small difference. Maybe you see like 0.2, 0.11. This is small difference. That's 50%, man. That's 50% better, which is a huge success in 1 year, a huge one. So beyond zero here seems to be like, yeah, not much. It is a huge. Let me tell you, this was the huge year for them. It was the IPO. I think it was 2019. We can see it somewhere here, but I'm pretty sure 2019 or here it is. On April 2019, Closai stock composition IPO. Yeah, here it is. So yeah, this was the IPO, which will be visible, of course, in the 1 year later years, and this is the big moment for Zoom. And it was a big moment. So 2020. Let's check. Revenue again doubled, almost doubled, not exactly double, will be 660, almost double. Cost of revenue almost double. Gross profit, that's like 70% higher. Research double, marketing and sales almost double, and administrative 50% more. So they are administrative effective. Total operative income 499, so we are a little bit in the good numbers. Then income loss 26,000, then income loss $25,305. Now minus 3,000 on distributed earnings. We are here finally, $21 million in profit. That's not peanuts. This is the first time you as a stockholder would have would be in a profit actually. And yeah, and now here comes the big thing, right? March 2020. Let's see how it go. So it went 2020 January, and here Corona starts. March, everything is falling. Everything is falling in March. Look at this. March, February, Corona is starting, and look at the Zoom. What Zoom is doing. This is online meetings, right? This is really understand. You need to understand how things works together. Yeah, this is a common sense, right? When you have a company which is providing online meetings, and the Zoom was high quality since the beginning. I remember it in 2019 even. I tried it. I did all online meetings on Zoom basically. You have to understand how the market works. So Corona came, everyone in all around the world starting doing everything online, all the meetings. And look what just happened. Let me remind you that we are here at December 2019 at 63 dollars per share of Zoom. Okay, that's okay. Let's take January. So we have at the beginning of the year. Beginning of the year, the low is 65.81. We start here. Let's go 1 year later. So January 2021. Okay. All right. If I will take January 2021, where the high was down, we are still in an absolutely massive profit. What is it? 500, 600%? 600%, right? Here, that's 10 times more, basically. Yeah. So huge success for Zoom. Skyrocketed. Let's stop here for now. We are in 2020, 2021. So huge success in this year. They didn't the fiscal year is always 1 year back. So you will not see it here. You will see it actually here. So 2020, we already discussed the first time you were in profit, a small profit. Now Corona came. Corona came, absolutely massive. So 2021 will be 1 year back. So that's a revision of 2020. Yeah, so to give you understanding, 2017 will be 2016. It's like a revision of 1 year back. So revenue, revenue. Sorry. Look at this. It's 4 times. Oh my God, that's $2 billion, 2.5 billion. That's just absolutely crazy. Yeah, the cost of revenue, however, was skyrocketed. I'm not sure what happened there, but it was 8 times more. Anyhow, research and development doubled, expenses doubled. This one, a lot of administrative, probably thanks to IPO administrative. I would say that this was the IPO administrative, that's why it is so high. That's 4 times higher actually, it's huge. So total expenses $1.1 billion. Absolutely crazy numbers. If you compare it to here, 60 million versus 2.6 billion in 4 years. In 4 years, let's just write it down, okay? How many times they make the profit. So that would be divided by 60. 44 times. So Zoom raised their revenue 44 times in 4 years. That's 11 times per year. That is just massive. Anyway, their net income loss 600 million. Before it was 25. Just give you the perspective, okay? And net income they have 671 million. Absolutely amazing. And now this is the gold mine for stockholders. You can see it's absolutely gold mine. And yeah, whoever bought it here was a profit. I didn't. I bought it. I start buying Zoom maybe somewhere here, and then continue here, and now I'm buying it still. I still believe that company is great. It's you can see on this structure that it's doing great. Of course, the Corona times are getting out a little bit, so company got overvalued during Corona, and it needs to find its value now. But I think it's now very heavily undervalued. This is just my opinion. It's under golden pocket ratio. It's this is the low actually here. Let's do it a little bit different. Let's do it like this. This should be the golden pocket. Yep, I had it wrong. So the golden pocket will be somewhere here, and still we are very low under EMA. And I truly believe once we will recover, we will skyrocket somewhere here. So that will be a good valuation of the company somewhere here in this area, I would say. This is overvaluation. This one is clearly overvalued, but somewhere here between 263, 380 will be good value, which is 100% from here. So for me personally, I'm buying the stock now. I think it's heavily undervalued. I show you why I think that. I show you how Zoom is doing. They are doing great. They have a lot of money. They have a lot of revenue. They are doing. Uh, it's amazing. What I'm concerned a little bit is they are highly ineffective to keep their costs down, but that will come in time. So yeah, I believe in Zoom. I believe once it will recover, you can make some money on that. I showed you why. You can read all the annual reports from top to bottom. It's 100 pages. So when you will have 2-3 hours of spare time, or maybe even more, 5 hours, you can spend more time on that and see all the reasons why they did what they did. It's very interesting read. Everything is explained there. Every single number here. So yeah, I wanted to show you something else today. What is the time? 25 minutes. Sorry about that, but yeah, deeper analysis needs time, as you could see. And that was not even deep. If I should do deep analysis of this report, we will sit here for 3 hours, at least. At least 3 hours. So this one was a nutshell, but just give you understanding how things work. It's not all about only crypto here. It's not only about Bitcoin and Ethereum there. You need to know also about other things, how stocks are behaving, how the government is behaving. Everything is connected together. Yeah. So the more you know, the better for you. Sadly, at Bitcoin and Ethereum, you cannot take a report like this and just look at it and say like, yeah, this is awesome company. Let's put money into that. No, Bitcoin and Ethereum is work on a little bit different level, but stocks, how to pick stocks, you should always check these reports. You should always read what the company is doing. You should understand what their product is. If you don't understand what the product of Zoom is, don't buy the stocks, man. If you don't know what Zoom is doing and how they are operating and how they are doing in time, just don't buy it. I mean, if you buy it only based on the technical analysis, that's one approach. Of course, you can take EMA and say like, yeah, it's really really far away from EMA, so I will sell it here. Now it's really far from EMA here, so I will buy here, and you can do it all over again. I will buy here again and sell again when it will be far away from EMA. But the better approach, of course, is always to trust the company, because the risk which you are having with technical analysis only is that you don't know how company is doing. So you can see that the EMA is going down and you can buy for 154, but EMA can go down much deeper. EMA can go down here and here and here and here, and it can go to zero and somebody else can buy it. But that's the business. But you need to understand the business. That's the rule number one. If you want to invest into stocks, invest into things you know. Invest into business you are interested in. Invest into things you working, for example. Yeah. So yeah, sorry for very. I'm not sorry actually. It's. I think it's important. It's important for you to pay attention for this long time for deep analysis. I hope I gave you some information today. That would be it. Thank you for watching. Bye bye.